Let's check on the markets now, and UNL Livestock Market Analyst Dr. Elliott is our guest. We spoke earlier this week on UNL's East Campus, and a major part of our interview centered on a report Elliott wrote about livestock price forecasts. We took a deep dive into that data, but I began by asking him what goes into those numbers, particularly with feeders and fed cattle.
So the report covers the third quarter and fourth quarter prices, and it gives both an average estimate as well as with some high and low expected prices. And so in order to capture that, both that point forecast and also the variability, we use seasonality, some trends, and also trying to take into account the current market conditions that producers are facing.
And when you look at pricing for those two sectors, if you dig a little deeper, is there reason for optimism for beef producers?
So there is a reason for optimism. I think prices are trending higher, but what we have to realize is that there's a lot more uncertainty in the market itself. Specifically when we're talking about projected basis, so I provide estimates for steers, heifers, 5-6 weight, 8-9 weights, live cattle, and also boxed beef. We're talking about hedging or trying to aggressively manage price risk. The biggest thing that we're interested in is what is actual basis going to be. And right now projections are going to say that basis is actually going to be weaker than is expected. So what does that mean for someone who's a producer who's hedging? Which means that the average price they're going to receive is going to be less. So there's needs to be an understanding that, as the futures and cash market kind of trend, we might be looking at weaker basis than we originally expected.
So going a little bit further, when we're talking about input costs, why is a good plan going to be really necessary this fall in that area?
Yeah, I think a good example would just be like distiller grains, right? And so when we're looking at distiller grains, people have sometimes the options to make changes between dry distiller grains and wet distiller grains for different reasons. What we see is that the average price on a dry matter basis is pretty much the same. But when we're looking at this range in prices, dry distiller grains are much more problematic in order to people who are feeding that. And so that's going to affect a lot of different sectors, either the feedlot sector or the cow-calf sector who's trying to get some maybe nutrition throughout and some protein throughout the winter. And so trying to do some aggressive risk management on some of those feed input costs is going to be really important.
Let's talk about feedlots and slaughter capacity. So in terms of how they're looking right now, and are we past that backlog of cattle that we were experiencing in the spring?
Yeah, so I think we're close to being there, but not all the way. So when we look at the number of cattle that are over 90 days, we're basically below 2019 numbers. So that's a really positive sign. That's the first time we've been below 2019 since April. But when we look at cattle on feed over 120 days, we're still about 10% higher than we were back in April. So I think in about the next month or two, we're going to be fully worked through all of the cattle as an industry as a whole. When we're talking about separate producers, I've talked with several producers that they were through all the way back in June. And so each producer on average probably is going to vary, but as an industry as a whole, working through all that cattle, in the next month or so, we should be pretty much back to normal.
And when we look at coronavirus, because of course that continues to make news, that's something we've been dealing with for several months, we'll continue to deal with for the near future, at least in some capacity. So if we get that second wave of coronavirus this winter that some folks have been saying that we could potentially get, do you think that the beef industry is better to handle it this time around?
Yeah, so I think kind of 2 points. First, I think what really kind of impacted particularly slaughter capacity was the cases that occurred within the slaughter or the packing plants. And so a lot of those packing plants shut down to implement physical distancing measures, to put in plexiglass, to provide some spacing between employees. It also went in there to kind of implement OSHA and CDC recommendations. So if there were to be some sort of case outbreaks amongst packing plant workers, I think the packing plant industry as a whole is a lot better equipped in order to handle some of those cases and have the protocols in general. I think probably the biggest thing that we're going to be watching is, as if cases start to rise again, what is going to be the government reaction? So a lot of the quarantine and those restrictions, those were the biggest determinants to, that decreased beef demand because consumers weren't able to go to the food industry.
And speaking of beef demand, how's that looking as far as exports? Are we still getting beef demand in that area?
Yeah, so exports has probably been the shining star throughout COVID that a lot of people have been talking about. Prices would be a lot lower if we didn't have situations in Europe and also in Southeast Asia where we've been able to ship a lot of beef, pork, and chicken. Probably most noticeably that we've been talking about for probably the last year as economists is African swine fever in Southeast Asia, which has really affected kind of the repopulation efforts there. And as they start to repopulate, they're not able to, both pork and beef really start to be pulled in, and we're up, close to 40% over in China already for beef and almost 120% in pork.
All right, so Elliott, you've given us lots of good information today. What are the major challenges that beef producers will be facing for fall and winter of 2020 and then going into 2021?
I think there's just a greater need to manage the uncertainty in the market. So most of the time, we follow seasonality, we follow trends, and it's really easy to make pricing decisions and management decisions. And generally there's quite a bit of time to make those types of decisions, but I think one thing that we've seen with both the Holcomb fire, the bomb cyclone, and now with COVID-19 has been this need to manage the uncertainty, not the actual number, but this range. And so in this report, that's one of the reasons why I emphasize what is this range that we could be looking at, and really not be pulled into, oh, the number is going to be higher, but look at, was there a lot more uncertainty in that number?